Here's a question for you. At what point does the actual economy catch up with our markets? I think it's a fair question right now because you look at these economic fundamentals from the 4.3 million Americans that just suddenly walked off the job in the month of August to the massive inflation we're seeing. I mean, did you see the report this week? 5.4% of an increase year over year in consumer prices. And then you couple that together with this mess out on the West Coast. Good luck getting Christmas presents. And by the way, if you do, they're going to cost more. Hello, everyone. Welcome to the Trish Regan Show. I am Trish. And you know what? I'm getting annoyed because this is the byproduct of bad policy. Right now, the only thing the Biden administration has going for it is the stock market. It can point to the stock market. But the stock market is so darn reliant on the Federal Reserve. And now the Fed says, guess what? Come November, we're going to pull back on our bond buying. So they're not going to print as much money. They're not going to go out there and buy up mortgage-backed securities and buy treasury bonds, thereby keeping interest rates low. So guess what? Suddenly investors are going to have a choice. Maybe they'll actually put their money into bonds and get a higher interest rate for them. Well, once that interest rate starts to go up, it means we're paying more for our debt. And it also means there's going to be competition in the stock market. It should have the effect of lowering valuations, unless by some kind of miracle, these companies are able to just turn in the earnings. So that's what we're watching for. And what we're also watching for is just to see how this all plays out. I'll tell you, the Fed is doing what you might call some kind of elaborate financial tap dance. And I just question how long they can keep dancing, right? At what point do investors say, well, we don't think that these companies are properly valued? It may be the point when these companies say, you know what, inflation is going to start to hurt us. Delta came out this week and Delta said, guess what, fourth quarter, we've got something weighing on our profitability, and that is higher oil prices amid other expenses. We've seen a lot of companies come out and say inflation is taking its toll. Not to mention, what are they going to do in terms of workers? Can they get workers? 4.3 million Americans just walked off the job. Of course. I mean, look, when Uncle Joe's handing out free checks, why bother working for a living? I mean, really and truly, I mean, people are not dumb. Anyway, quickly, I want to get a word in from one of our sponsors. I mean, by the time you hear about some of these exciting new investments, it seems these days that Wall Street has, others have beaten you to the punch, right? Like maybe Bitcoin, you were interested in Bitcoin. I remember reporting on Bitcoin when it was $100 a coin. Well, now it's in the $50,000 range. But there's a new investment that's actually just starting up. It's a very interesting kind of investment, and it's something that you really should take a look at, especially if you're trying to hedge out all this craziness. I'll give you a little spoiler alert. It's art, but it's not art like you would think, right? You're not like buying a Picasso for millions of dollars. Art has historically been something that really only the wealthy could invest in, and this company is actually changing that big time. Contemporary art prices, you should keep in mind, have done very well when compared to the rest of the market. In fact, contemporary art prices have more than doubled S&P returns from 1995 to 2020. Think about that. They have more than doubled the S&P return. And thanks to a recently enacted law, this asset class is now being made available to everyday investors. And that's what I love. Masterworks is the company here behind this. It's the first platform ever actually to bring art from the artist to the investors so that you can invest in this. And that's a big deal. I mean, you can invest in a Monet. Now, you're not going to get to hang it in your house necessarily, but you are someone that has invested and has an ownership in that. And that has a certain liquidity with it, right? Over time, which is kind of cool. Masterworks is the first platform to bring art from artists like Picasso to the portfolios of everyday investors. They have more than 200,000 members, and the demand has continued to explode. I want you to take a look at it. Just check it out. Masterworks.io/Trish. My name, Trish, and you can secure your spot. We've actually just got about 45 spots that they gave to me to give out to everyone. And look, I think it's super cool. I don't tell you about anything that I don't think is really neat and worth taking a look at. This is something I think you should look at. Masterworks.io/Trish. There's important disclosures there at masterworks.io/Trish with a disclaimer that you want to take a look at. But hey, I mean, it's another way of investing and it helps diversify you. And I really think diversification is going to be pretty critical in light of everything that's going on. So let's talk about this port situation. Do you know that pre-COVID, the ports never really had more than one container ship that was waiting in line to offload? And now we're looking at upwards of 60. All these container ships and that's up. So when the Fed or some politicians talk about transitory inflation tied to supply chain issues, this is part of the supply chain problem, right? Because you get all those ships that need to be offloaded. And do you have the workers to offload them? That's part of the problem. The Biden administration is working together with some of these companies, some of these big transportation companies, to make sure that the ports are open 24/7. And a lot of the transportation companies are now saying, we're going to be working more. We're going to be doing our part to make sure that we can get all of this merchandise out into the country, which, by the way, is coming from foreign sources, which is not ideal to begin with. But that said, it is what it is right now. I mean, I'll tell you this. I remember during the height of the pandemic not being able to get Lysol, right? Like, I like those little Lysol wipes. I thought, what the heck? Like, why can't you get Lysol? And then the pandemic kind of, it went through its ups and downs, shall we say. And, people were out and about again. You could buy most products, but you couldn't buy the Lysol wipes. Well, it turned out that the chemicals that go into those wipes that you use for cleaning, well, those chemicals were coming from China. And because they couldn't get the chemicals from China, because, well, China was using a lot of those chemicals, right, domestically, because they needed them for things like Lysol and bleach, et cetera, all those things that would clean really well. So because we couldn't get them from China, it meant we didn't have them here. And we didn't have the factories to actually just make these really simple chemicals. And I thought, how messed up is this, right? Why are we depending on China for things like masks, like we were initially, or gloves, or chemicals that you need for cleaning? I mean, this is not highly sophisticated stuff. Now, I get competitive advantage, etc., but come on. I mean, at some point, we have to prioritize. And for domestic safety reasons, right, and economic reasons, you want to be able to make sure that you got stuff like masks if you need them, or ventilators. Remember the challenges that they had with those. So I have a lot of concerns about relying too heavily on these offshore economies to provide these things. But nonetheless, it is the position we're in right now. So then you say, okay, well, they're getting this stuff here on the container ships, and now we can't offload these things because we don't have enough workers. We don't have the capacity. I mean, you're seeing a real worker problem all over the country. Look at what happened with Southwest, right? They didn't have, well, I mean, they had a disaster of a time, right? And that's in part because of the algorithms associated with their flights, and they had no margin of error, as their union has criticized them for lacking. So no margin of error, but then they also didn't have the employees to be able to send out there and help repair all this. So you've got corporations right now that just don't have enough people that they've hired. The other problem right now for some of these corporations, and I've talked to some people in the manufacturing industry here in America that say, look, that's the one unknown. Well, you might be able to hedge out higher oil prices and other inflationary issues. How do you, like when the factory across the street says we're going to raise, and you say, okay, well, we're going to raise, and they say again, we're going to raise, how long does this go on? It's not really clear. And of course, don't forget what it does to profitability. If they raise wages, these factories, then it means they're either charging consumers more by way of inflation, or they're making less money, in which case the stock market gets hurt. I mean, the money's got to come from somewhere. This is what too many people fail to understand. You just don't grow this stuff on trees. And so consequently, as the Fed starts to pull back, the question will be, is our economy strong enough to withstand that? And I'm not sure that it is. I'm not sure that it is, especially going into November and December, when we've got people that want to go out and buy Christmas gifts that can't get them, so then prices go up again, and we have supply issues coupled with lack of worker issues, coupled with just the money printing that's already happened issues. I mean, this really is effectively setting the stage for real problems. So I mention this just because I want everybody to be aware. Look, I'm a long-term investor. You know that. I believe in this country. I believe in our economy, and I'm in it for the long haul. But if I needed to take money off, 6 months from now, 9 months from now, 2 years from now, I'd be getting pretty nervous. Personally, I take opportunities when the market goes down to actually look at those as buying opportunities, so long as I know I can sleep at night, right? That's the biggie. You never want to be overextended. You never want to be effectively, I say playing. It's not playing, but investing is, rolling the dice to a certain extent. You never want to be getting yourself in too far with money that you can't afford to be taking chances with. Not that we can afford to take chances with any money. Look, every dollar matters. I wish the Fed and the federal government would understand this sometimes. Really and truly, every dollar matters, and our dollars are very, very precious, and we need to be careful with them, and we need our government to be careful with them. But I just want to throw this out there. Watch the market very, very carefully as we now go into October with so many earnings reports coming out. We got some good news out of JP Morgan. We did get good news out of Delta, except for the fact that they're warning on the fourth quarter because of these higher oil costs. We probably will continue to see higher oil. If you go to yesterday's podcast, I did a big thing on this. Why are we seeing higher oil prices, and is the Biden administration at all to blame? Do take a look at that, because there's some interesting issues at play which have me convinced we're going to continue to look at higher and higher oil. Anyway, thank you so much for tuning in. Just a quick reminder, go to trishintel.com. That's my website. Sign up for my daily newsletter. Do make sure you subscribe to this channel. Do make sure you give me a thumbs up or a rumble wherever you're watching. And do look it very, very carefully right now. This could be a little bit of a treacherous time, unless the Fed is some kind of miracle worker. And look, I'd love it if they were. We shall see. I'll see you right back here tomorrow. Thanks for listening, everyone.